Hi there and welcome. My name is Bronson. I am the Director of Investor Relations with Michael Blanc at Nighthawk Equity, and I'm here with the Michael Blanc. Welcome, Michael.
Hey, it's great to have you here, Bronson. What I love about these things is that you're talking to all of our investors on a weekly basis, and it gives us all these great ideas for these videos because all these questions we're answering are questions that you get from the investors you talk to. So, what are we going to talk about today?
Awesome. Yeah, I love it. I get just tons of questions, and I know you love answering questions. This works out pretty well. But the question that comes up that, for people that are new to passive multifamily investing is, how do I vet a syndicator, and why is that so important?
Yeah, so it's so important. I think it's the number one thing is because it's really a team sport. It's a people business, really what it is. And sometimes I think people get a little bit caught up around the deal itself. They get really into the weeds about the numbers and the market. But really, if you partner with, you invest with a experienced operator, they will have done all that. They will have evaluated the markets. They will have evaluated the submarkets. They will evaluate properties in those submarkets. And the reason they're doing this deal is because collectively they think this is a good idea. So even if you don't know anything about the deal, even if you didn't see it at all, if you have confidence in your team, you can have confidence that the deal will be done right. So it really is about the team. It's almost like from an active, if I'm an operator, to me the biggest factor is the property manager. It's the same way, right? So if I have a great property manager in place, the quality of my life and the investment is going to be great. Versus if I have a not so good one, now it's going to be a lot of effort and there's going to be possible conflict. So it's the same thing here. If you're a passive investor, it's all about the sponsor or the operator that you're investing with. So it's absolutely number one.
One thing I've learned in business is exactly what you're saying. Partner with is so important. So that is the kind of the number one thing. So what are some important qualities to look for when you look for a team or a syndicator?
Yeah, it really is on the team. You want to ask the question, who's on the team? And if it's one person or two people or three people, even beyond that, like who's going to be the proper manager on that team? You want to look at the team as a whole. And you want to see what the track record is, not only of the team itself as a whole, but also of the people, the individuals on that team. So the more track record there is, the better, right? And the more track record as a team, the better. Now, in this environment, a lot of times we have loose joint ventures, so the team itself, the makeup of that team, the track record of that exact team may be zero because the first time that those partners have been doing a deal. That's okay. Then look and see who is on that team and also who's in charge. How does the voting happen? If there's a tie, who breaks that tie? So you're looking really for as much track record as you possibly can on that team. Like, for example, with Nighthawk, we have 1,400 units or so. It's a pretty good track record, but you also have dedicated people on our team. One person focused on acquisitions, one person on asset management, one person on investor relations. That's you. We have someone, Drew Niffen, who basically runs the entire organization. So, who does what on the team, who does what in the general partnership, what does all the partners bring to the table? And so really looking at the team as a whole and also who are the individuals on that team.
Thanks. That's a great answer. So one question that comes up and just something I think people wonder is if somebody, if a group doesn't have like 30 years or 20 years of experience doing this, is that a deal breaker?
Well, not necessarily. And here's what I mean by that. So yes, you're looking at all this just track record. And I think that's ideal if you can find someone like that. But again, in this environment, a lot of times we have joint ventures that we do. We might joint venture with someone who brings us a deal, or we might joint venture with someone who can help us raise some capital. So sometimes the partnerships are actually fairly young or exactly new. Also, here's the other thing. You may be investing with a new investor. Should you not invest in a new investor? I don't think that's not a deal breaker, right? You want to look at that person because you look at that person, and just because they don't have a track record in multifamily doesn't mean they don't have a track record in life. Right? In that case, you look at, related or unrelated professional experience. Like, what has their career been? Do they have a track record of success? How have they dealt with difficult situations? If they're a small business, if they're an entrepreneur, have they, what track record have they? Do I trust in that person? So especially if you're a friends and family investor, you're going to be investing with a friend or family or someone you know, and you're investing with that person largely because you know that person in a different light. You may not know that person in a multifamily investing experience, but you may know him as a colleague or as a neighbor or as a friend that you've known for years, and you trust that person. You know that they're going to do what they say they're going to do. So it's a wild track record. It makes it easier for someone who does not know an operator, okay, someone who's coming in kind of cold, or they meet him at an event. It makes it easier for someone cold to invest in that person. The friend and family investor has the advantage of knowing a particular operator for years and years on end. So you don't, in my opinion, you don't necessarily need that track record if you're a passive investor. But if you're new to an operator, that track record, the fact that they've been in business for a number of years, maybe they've sold or refinanced, or they've been through a market correction, maybe they've even lost some money, how do they react to difficult situations? How do they handle those situations? I think that, to me, is, you got to look at the whole entire picture of the operator.
Thanks for sharing that, Michael. So the question for this is obviously we're going to know some people in a relational sense, and some it's more, we're getting to know them. But why is it important when looking at working with an operator or syndicator to consider kind of long-term partnership as opposed to a transactional, like I invest this money in this deal with these guys or these guys, versus developing maybe fewer long-term relationships?
Yeah, if you look at some of the successful passive investors who are literally quit their job with passive investing, and that's really what we're trying to do with Nighthawk, is help the passive investor quit their job. But if you study those people, and we've had a few on our podcast now, they only have like one, maybe two, at the outermost, three operators that they invest with. So it's not like they're investing with, it's not like a diversified mutual fund portfolio with 15, mutual funds or ETFs in it. It's not like that at all. You're really looking for long-term relationships, and we're looking for long-term relationships as well. I mean, the average investor might want to put in the minimum investment of $50,000 just to see how they do. But my gosh, if they really like the partnership, we communicate well, we do what we say we're going to do, the investment performs reasonably well. There's no reason why you couldn't invest with the same operator over and over and over again. So we really value long-term relationships. We encourage you to check us out. Invest a minimum, even if you might have more to invest, see how we do. But we at Nighthawk, we're looking for a long-term relationship, because that's how we're going to build the business. We don't want to go out and have to find new investors every single time. We'd rather call up our existing investors and go, my gosh, we have this wonderful new opportunity. Why don't you guys invest with us again? And go, oh, that's great. I'm so thank you for bringing us the opportunity. And that's how we build our business.
That's great. Yeah, no, we do find people sometimes have a substantial net worth, and they'll start out with the minimum, and it'll be an opportunity to get experience, as long as it's their first deal they've ever done. And they'll both be getting experience with multifamily syndication as well as our group. And it's just a chance to really see what they've done, put, all their eggs in one basket. They're just kind of testing it out and see how it goes. And then over time, we have those people invest in multiple deals or every deal that we do. So it's kind of neat to see that with that relationship. So Michael, I wanted to thank you for sharing with our audience today, and for each person who joined us. Thanks for taking the time to educate yourself. This is how you get better. This is how you grow your wealth, is through education. So a couple kind of next steps. If you're still kind of new to this and you're not quite sure what your next steps are, Michael put together this awesome report where it compares the stock market and multifamily real estate investing. And if you go to the michaelblanc.com/report, you can get that for free. It's a great report. Secondly, if you feel like, hey, you want to get involved, maybe you've done a deal, maybe you're interested in doing passive deals, you want to get on our deal list, we have something called the Nighthawk Investment Club. You can go to nighthawkequity.com, click the join button. You'll set up a call with us. We'll establish a relationship, and we'll get to know you and see if it would make sense to work together. So until the next time, thanks so much, and keep educating yourself, and we'll see you on the next video.
Hey there, before you go, grab that report that we talked about. You're not going to want to miss that, as well as subscribe to this YouTube channel. Super important so you don't miss our videos. And hey, check out this next video.